Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is president and co founder of LandGate.com, Craig Kaiser. LandGate is an open property rights marketplace that provides free listings of mineral assets, wind, water, solar, timber, cell tower rights, and more. Now, prior to founding LandGate, Craig was owner and chairman of Kamara Kaiser Mining Company, which is a nonprofit West African precious minerals mining organization. And so, guys, with that, it's an honor to welcome my guest for today's show, Craig Kaiser. Craig, how you doing today?
Doing well, Kevin. Thanks for letting me come on and talk about the topics that we're going to cover.
Yeah, no, excited to have you here and excited to really delve into, I guess, a very different realm than what we normally have here on the show. Again, this is a commercial real estate investment show, and a lot of times we kind of stick to the major food groups, and every once in a while we'll get a little nichey. But I think today, it's off the beaten path, and it's down a good path, and it's one I think that's very relevant to where we're at in the world today, and just really looking at opportunities through a different lens, and so. What I love for you to do, Craig, I guess first and foremost, I didn't do you justice with the introduction to your bio. I shortened it a great deal because I figured it's better coming from you personally in your own words. A little bit about your background, if you could, ultimately before you came to LandGate, and then, we'll dive into who LandGate is and what it is they do.
Yeah, certainly. Well, I appreciate the introduction, and I'll cover it a little bit more in depth here. I don't come from the real estate industry, which is we're going to talk about what you've mentioned it, a bit of a niche in the commercial real estate market where in my world it's an enormous industry. The energy industry is 6-7 trillion dollars a year. The commercial industry very large as well. But my background's in the natural resources energy portion there of looking for where's there additional value on the same commercial real estate that a lot of your listeners are looking at, screening deals, investing in, divesting. They're looking at the same exact deals. I just historically have been looking through them through a different lens. I'm
Mhm.
looking at, what are the mineral rights going to be worth there? What are the potential mining minerals there? If I'm going to buy a piece of property in the outside of Breckenridge, Colorado, I would put my science hat on and say, okay, well, yeah, that's really cool. I'm close to Breckenridge. I can go skiing. There's value to that, but there's a significant mineral trend that runs through there that yields gold and critical minerals and rare earth minerals. And so we were dealing with commercial real estate in my background in energy companies and natural resource companies. And we were transacting on commercial real estate, but we had different data sets and we had different views of the same property that's being transacted. And that created a huge segmentation of energy and real estate. They were basically two completely separate industries because of the mineral component, Kevin. It was really difficult. A lot of the minerals were already severed from property. It was very difficult to understand if there's any value there at all. And the folks that did understand there's value, then they're guessing. They're either way too high on their valuation or way too low. So my background was working as an executive or a geologist at very large energy companies, mostly looking for oil and gas. I also did work in West Africa, working for and developing some mining organizations over there, looking for precious minerals. But what LandGate has done and we've been in business for 8 years now, primarily work with a lot of real estate folks, landowners. And what we started our company with was basically minerals because they were so difficult to understand what is the minerals actually worth. But over the last 3 to 4 years, the additionality that we've created to our platform is what's merging energy and real estate together. And
Mhm.
this is what all of your listeners should be paying attention to. There is no longer an energy industry, and there's no longer a commercial real estate industry. They're not they're not separate anymore. They are completely linked because it's no longer subsurface energy exploration where you have this very difficult tidal chain and nobody really knows what's there. And that's its own specialty, right? All the commercial folks will just stay away from that. That's in the energy world. Well, now with things that are happening over the last 5 years, all of the energy additionality, it's tied to commercial real estate. It's tied to the surface. It's tied to the surface owner. So battery storage, EV charging, solar energy, wind energy, all of these different, and these, it's going to be an enormous, enormous push into commercial real estate. It's already
Mm-hmm.
there, but that's merging the two industries into one. And I think that's what we've done really special is provide still very, very expensive data sets for the most part. You know, the energy industry is highly specialized and technical. What we've done is put all of these massive data layers and analytics of the ultimate question, Kevin, if you're looking at a piece of property, what is the potential solar value there? What is the potential carbon credits there? What's the potential for battery storage or EV charging or the mineral rights? That's really all you want to know, right? So what Zillow did for residential real estate, and whether people like Zillow or not, they fundamentally changed residential real estate and they'll never be the same again. And it created an enormous increase in amount of product that was being moved in residential real estate. That's never existed in natural resources or even commercial real estate. Obviously, you have LoopNet and some of the large marketplaces that deal specially with commercial real estate.
Mm-hmm.
Our platform has brought that enormous energy market and that enormous commercial real estate markets into the same space. So people who are investing in commercial real estate or investing in energy, which are now the same industry, they have one standardized place to get their data, analytics, and information, and then transact in the marketplace. And that's where we are and what we are in a nutshell there,
Okay.
Kevin.
Is your database, is it all encompassing of the entire continental United States?
Yes, we cover the entire United States. You know, we've really, really focused when we, again, primarily when we started the company was with traditional energy sources, oil and gas, hard rock mining, things like that. For the last 3 or 4 years, we have really, really stepped up on the energy infrastructure side of what we do, where we have more data than any company on the planet when it comes to where's distribution lines, transmission lines. There's a lot of different databases that are completely insufficient. They're not complete data sets, but we have transmission lines, substations, distribution lines, but all of the critical information that is attributed to that. How much power, how many electrons are flowing through those points of interconnections? How many people are waiting in line to put solar projects or battery storage or EV projects online in certain areas? And I'm assuming that a lot of folks listening are probably in the back of their mind like, no, I do my core business. I invest in commercial cash flowing properties. These are going to be single family homes. These are going to be apartments, whatever it is. What's interesting over the last 12 to 24 months is, again, the energy industry is not outside of that. Every single piece of
Mm-hmm.
property now, with what's coming with battery storage and electrical vehicle charging, every single one of these parcels needs to be looked at of what is the additional value there. Is actually putting a single family home or multifamily home, whatever it is, on this and subdivide it, is that actually the right thing to do? Or can you actually get a hybrid solar battery storage project on there, and you don't have to worry about anything for 35 years, and you're making enormous returns? You can sell that cash flow 1031 into other properties. There's so many different mechanisms that you can do now as an investor to look at that property. It's just not what can you do to subdivide the property.
Mm-hmm.
In a lot of cases, that's still going to be the highest and best use. But now with what's happened with carbon credits, renewable energy, it's the exact energy developers, carbon developers, they are competing right now with traditional commercial real estate investors for the exact same tracks, but for different purposes.
Interesting, interesting. So no, that's all great, and I appreciate that, Craig. So again, putting our real estate hat on again, just saying, hey, that we have to look at commercial real estate really through a completely different lens than what a lot of the listeners, myself included, do.
Mm-hmm.
We're looking for cash flowing assets. We're value add investors, us personally, so we're not looking for stabilized cash flowing assets. We like things that have a little bit of upside potential. Speaking to what we're talking about here, we're talking about vacant tracts of land that ultimately have upside potential, and that's to the surface capabilities, whether it be solar, wind, battery storage, what have you. How do we help me get from point A to point B? So just I guess we'll use your website and your database because you guys have the data sets as an example. So get on there, and you guys have spent some time there. You've got a lot of listings. I mean, there's active listings for sale in pretty much all 50 states. throughout the U.S. Um, what exactly am I looking for? So I find a potential listing for sale that that states that it could have an opportunity for solar or for wind, what have you. How do I? What's the additional due diligence? How do I go from point A, having that raw piece of land, and I think could be an opportunity, to actually having a cash flowing
Mhm.
piece of land that's being utilized for, again, solar, wind, or some type of battery storage, what have you, something along those lines.
Yeah, it's a great question. So there's a couple different ways for the real estate folks that you can really utilize the marketplace and the platform. Obviously, like you stated in the beginning of the interview here, it is an open marketplace. We don't charge for listings. We don't take commissions. We're not brokers. We don't do any of that. It's an open marketplace where landowners can come and post deals for whatever they want to do. They can sell their land on the website. They can post their property to get a carbon credit lease, a solar lease, whatever it is. So you can actively go and screen and look at what opportunities are out there. A lot of these listings, these are exclusive. So these aren't going through an MLS. Nobody else has these, right? These are coming directly from uh, a realtor who their broker may not offer, their MLS may not offer leasing listing opportunities.
Mhm.
So there's a lot of different acquisition type investment opportunities that are out on the website. So that's kind of the first one. You can go and procure and screen deals that are out there right now. What we've built within the platform themselves, though, for real estate agents, land professionals, real estate investors, are tools to help you go through. And the goal is not, Kevin, for you to be a geologist or an electrical engineer and
Right.
look at all these massive data sets. That's not, that's for an energy company to use those data sets. We've broken it down where if I'm looking, I'm sitting in the state of Colorado right now. If I wanted to, if from an investment perspective, and I've done this in my own personal investments, if I wanted to go and find all of the land tracts that are less than $1,000 per acre to purchase, to buy, right? That's just what the land value is. Less than $1,000 an acre. We're in Colorado, so it's probably, let's go $2,000 an acre. And I want to go ahead and put a filter on our website and say, I want to find every one of those parcels that's greater than 200 buildable acres, meaning I can put 200 acres of solar panels on there. And I can go and I can find all of these tracts in the state of Colorado. I can do that in less than 30 seconds and put that into a portfolio. I can look at all of the owners. I can find what their email addresses are, their phone numbers. And me as an individual investor, I can go out there and I can compare all of these different tracts. And this is the big kicker is I can make a good real estate investment a phenomenal real estate investment because I have more data than everybody else. I have more lenses to look through at that property than everybody does. And this is, I don't care who it is. If someone's selling that property, I can look at it and say, what is the potential annuity? Are there potential carbon credits I can earn from this? If they're selling 50% of the minerals, what are the minerals worth? What is the potential for solar, wind, all of these different potential annuities? The majority of folks, actually all of them who are not using our system, they know what everybody else knows, Kevin. They know what's in the pictures, what is in the list, what's in the listing. There's really no special sauce there to get your leg up in the negotiations to find out again, if I'm going to make this investment, if I let's say I've got $15 million for a 1031 and I've been listening to your podcast, Kevin, I want to go ahead and take this $15 million and I want to invest it, diversify it across a couple different types of assets here. And I'm going to challenge my broker or land professional, whoever's going to help me procure these things, because I don't have time to do it. And I'm going to say, I want you to invest this $15 million. I want a fairly even split between, let's say commercial properties that are going to give me some cash flow, but I also want to invest, I don't do some land banking here, but I don't want to just buy land for land. I want you to find me land that has significant upside. And here's a real story, Kevin. There, a small commercial real estate investor had never done an energy deal in his life, got a subscription to LandGate, so he has access to all these different data sets and these heat maps of where high value solar, wind, oil and gas, all this stuff is. He went to, I believe it was, I won't call them out by name, but a very, very large commercial real estate listing brokerage, right? So you could see all of these deals that were for sale. Found 640 acres in northern New Mexico that was for sale for are northern New Mexico desert prices, right? Very, very low, $200-300 an acre stuff. Well, he was screening all these deals, looking at them on LandGate in unison, and he found out that that was an extraordinarily high value location for a solar farm and battery storage. He went ahead and purchased the property. He listed it then himself. He's never done an energy deal, but he knew he had more data than the people who were selling it. Buys the property for $200 or $300 an acre. He leased the property by making a listing by himself up on LandGate because all of these energy developers are looking for listings there. Energy developer reached out. The individual put himself got under contract with a solar lease. He's going to be earning anywhere, I won't give you exact numbers, anywhere from $500 to $1,000 per acre per year for 35 years once solar panels go on his property. He bought the property for $200 to $300 per acre. So that's kind of what we were talking about before the show, right, Kevin?
Yeah.
You can look at it and say, and you can do the same thing on LandGate. There's buyers that are doing this right now, large hedge fund uh, capital that's coming down to buy cash flows from solar farms. You can do that if you'd like. But me personally, I'm going to go and try to find property where I'm buying it for fair market value, right? If the worst thing that happens, I sit on it and it appreciates, right? It's just a real estate appreciation deal. If things don't work and I can't get into leases for any of these different annuities. But at a minimum, I'm going to buy a piece of property. If I'm looking at 5 different properties, whether it's inside C470 here in Colorado or it's 50 miles to the east, doesn't matter. It's the same. It's the same idea of making sure you're high grading the investments that you're looking at. And if all of them are the same from a real estate commercial perspective, I guarantee there's going to be some huge differentiations once you start factoring in what are the potential for all of these different resources.
No, that's very interesting. I love case studies, real stories. And so using that, using that for the for the next question, how would that individual, that investor have bought that tract of land? Is there a way for him to mitigate his risk? Because ultimately, like the data suggests that this is a phenomenal location. It's got a much higher and better use than that of just whatever that the listing firm had it listed as, just raw vacant land, maybe just recreational land, what have you. Um, how could he go about, or how could someone in that same scenario go about mitigating his risk and proactively source, solar developers that are looking for opportunities in XYZ quadrant of the U.S.? I mean, is there a way to mitigate, having that
Yep.
lined up
Yep.
while you're negotiating and before your money goes hard on that? Because I mean, and I get it, you could buy it and you could hold on to it, and inevitably it will appreciate over time, and it could
Sure.
be a great land banking strategy. But that's not where the fruits of the labor are, and I think in the
Correct.
endeavor that we're talking about. So how do we go
Yep.
about mitigating that risk on the front end?
You need more data and information than the other person has,
Yeah.
right? So when you're looking at energy leasing for solar, wind, battery storage, EV charging, it's not it's not the same as it is for oil and gas. If you have the resource in the ground, it's inevitable. At some point, it's going to be drilled, unless you're in California or New York or an area where the regulations keep you from doing that. If the resource is there, it's going to be produced at some point. This isn't the same thing here. So you could have a really, really good site and a really good location for solar battery storage, and you just sit back on your haunches and say, well, I know it's a good site. I'm just going to sit and wait. I'm going to wait because the last person who signs a lease gets the highest dollar amount.
Mm-hmm.
And that's not the way it works, because if the interconnection queue, if the transmission line or the substation where the power's going to flow into the grid, if there's no capacity for it, well, it's full. They're going to move to a different interconnection point, which could be in a completely different county, right? So that's something that's critical if I'm trying to de-risk my investment, right? So let's go back to what you were saying there. I'm going to de-risk my investment. I'm going to buy this 400 acres worth of dirt, and it's not high value stuff, which is exactly what I want. I'm going to buy it for even a little bit less than what that dirt's probably worth. But I see, based on all of the analytics, that this location is significantly higher for all of these different engineering reasons. Is the interconnection queue full? Well, we pull that. We run the analytics. So again, the goal is not for you guys to be an engineer.
Mm-hmm.
All of the calculations are already done. So what is the local marginal price? How much is so in a nutshell, how much is energy? How much does energy cost there? how much energy is needed there, and do you have the ability to produce it? If I have all of that information in front of me, I've severely de-risked that potential annuity. That's the first phase, is making sure the property that you're looking at, just because you're next to a substation, here's another case study. Just because you're next to a substation or transmission line doesn't mean that there's high value there. And I've seen some huge, I would say, stumblings that have happened where people have made some investments, and these are traditional energy folks. They say, I'm going to buy all this property, I'm going to lease all this property around this substation, and I'm going to make millions of dollars by putting solar farm on it. Well, they didn't have any data. They weren't spending $50 a month to get a LandGate real estate subscription and find out that substation was full. There's no more capacity there. There's no more you'd never know this. Everybody sees there's a substation there. There's nothing special about that at all. You can drive down the road and see the substation. What about the technical metrics of it? Is there available capacity there? He didn't have the information. And I had to very nicely break the information to him that your lease is not worth anything. And I had to show him, and this is not an exaggeration, about 2 miles away, there was what's called a renewable energy credit zone, where he was at, there was none, there was no capacity. The substation 2 miles down the road, phenomenal location, where if he would have parked his money there or paid $50 a month to understand that very quickly, he's significantly de-risking that investment. So there's the pre-purchase before your money goes hard, right? I'm going to make sure I have put every foot forward that I can to make sure I'm getting the best property here. And then the second part of it is the active marketplace, is competitively marketing that out in front of buyers, right? A lot of folks just pick up the phone and cold call, which is a horrible thing to do. Think of some of your investors right now listening. If I'm a landowner or I have a rental space and I pick up the phone and I ask them to make an offer, think about what kind of offers they're going to make, right? It flips the negotiation 180 degrees. You don't have to know a single soul in the energy industry. You create a listing, it's going to go in front of all of them in a competitive environment, and now offers will start flowing. So
And so
that's what we've tried to do.
and one of the resources or services that your site provides is actual valuation services, correct? So like in
Yep.
the event I find an opportunity that's not necessarily being marketed for, for its various land or for, solar, wind, battery storage rights, what have you. I think there's some upside potential there. You guys can ultimately value that for me, so I can have an idea of what type of upside exists there, if any. Correct?
That's correct. Yeah,
Yeah.
174 million parcels. Every single parcel in the United States has an engineered valuation for everything from carbon offsets to hard rock minerals.
Okay. How, help me understand like the accuracy of those valuations. I mean, realistically, and just
Mhm.
looking using the data of maybe valuations you've done and ultimately what they have sold for, and via the website.
Yeah, I'll give you a couple examples. That's usually a question that we always get is, how accurate are these numbers? Uh, I'll start with where we were, 4 or 5 years ago. We sat down with a potential investor in our company, a former executive of a very large oil and gas company, and using the same, what I'd say, a valuation engine that we have built for all of these other resources. We ran a valuation for his oil and gas company, consisted of probably about 1,500 producing wells. And we ran that valuation within, I think, 8 minutes. And we were within 1% of what he had just previously sold his company for, extraordinarily large numbers. But we are very, very close. So that's on the oil and gas side. We've moved the same calculations, same methodology, same amount of data for solar, wind, battery storage, carbon, all of those different assets. And we're not going to sit here and say we're perfect and we have everything nailed, because that's not true. Uh, we're very, very close. We're very close because there's still a human element to every transaction. There's negotiations for solar, for instance, Kevin. There's some folks, and I would say these are very knowledgeable, high critical thinking folks. They don't really, from a landowner or investor perspective, the person who owns that land, they have multiple different opportunities. They can build their own solar farm, but they're going to need a lot of technical experience, or they can just lease it out and earn royalties. And those folks that want to just lease it out and earn royalties, the sooner they can get solar panels on their property, the sooner their cash flow becomes realized, and the sooner they can actually sell that cash flow at a discounted rate and 1031 it and buy another investment while still keeping the property. So the goal is to get those solar panels on your property, not get the absolute highest solar lease. So in your investors that are listening, if this is something they want to get into, keep that in mind. Making sure that you get into a lease with, and this is really any of these natural resources, someone who's reputable, who will actually build in a short amount of time, and they're not going
Yeah.
to keep you, you're sitting there for 7, 8, 9 years. I've seen some up to 10 years, haven't been paid. They're encumbered in a lease, which that's not where you want to be, right? But that's kind of what LandGate allows those resources to those people who are listing investors. Here are some folks that you probably want to do business with. You're going to find that out pretty soon because there's so many folks bidding on the property anyway. Um, but you want to get that cash flow realized as soon as possible. A lot of folks are just trying to get leases in place and then go raise capital. A lot of those folks, they're never actually going to pay out to that landowner.
Yeah, I mean, at the end of the day, like when we're talking about creating an annuity here, the value is really in the actual tenant itself, and in the
Correct.
the lease, but also the tenant that's backing that lease. And so if you've got someone that doesn't have a track record, that doesn't have stout financials behind them, and so I get that's kind of where my mind started going, is like the validity of these leases and the actual people that are backing them. And is it a common case that you've got just a lot of haphazard groups out there trying to do this, but that's really haven't been successful yet, and tying up land and wasting landowners' time? Or I'm assuming there's equal amounts of both, of very reputable groups that have got a
Mhm.
track record, that know what they're doing, that move with swift efficiencies through this process, and others that are complete disaster, just like in any industry, I'm sure.
You're exactly right. Yes, it doesn't matter what industry we're talking about. It could be, forestry, carbon credits. It
Yeah.
could be mining, oil and gas, solar. There's bad players in every single industry. There's folks pretending that they have hundreds of millions of dollars of secured capital and they're leasing up everything. And then there's folks out there that are saying, hey, we'll take your lease right now and we will build on you in the next 2 to 3 years. We're not going to match what that crazy offer is right over there that you've already received because they don't have money. They've never even built a farm in their life,
Mhm.
right? So that's really what the competitive market does, is it lets you, without needing to have this extensive Rolodex in any of these natural resource industries. That's what a lot of, I mean, the people listening, they're professional investors, they're professional negotiators. They're going to be able to tell pretty darn quickly, well, they're going to understand this is how I make money, is by getting the tenant on my property, by getting the cash flow started on my property. And if company X cannot promise that, cannot guarantee that, or saying that it's going to come in 8 years, and they're offering at least 20% higher than company Y, company Y is saying, well, we're one of the biggest energy companies on the planet, and we will start construction year 3. Here's our interconnection queue request. Here's the permits that we have coming. To your earlier question, how do you de-risk the ability to get cash flow on the property? Well, that's it. You get as many different eyeballs looking at the opportunity in the first place.
Hmm. Yeah. Yeah, no, that's great. I'm just my mind spinning here. That's all really exciting. I love, again, I love niches such as this. Again, this is not a small niche. I know that
Mhm.
the energy industry is this massive, right? But in our small world of real estate, traditional real estate, it's just outside the typical box that we think in. But I'm just thinking of the fastest path to to doing a deal, or finding an opportunity that makes sense, and makes not just sense but economical sense. Is it knowing that there's multiple developers out there, reputable developers that are seeking land to develop, that have got the capital backing, that have got the track record? Would it not just be as simple as also find out who they are and exactly what their lease box is, as far as size of land, parts of the country that they're looking in, and I mean, and then literally utilizing your website to help them find, or why wouldn't they be doing that in the first place? Don't they have a team that literally use your data to find just that?
They do, yeah. So energy developers, they use the same exact tools that some of the real
Yeah.
estate folks use, right? So now keep in mind the psychology behind, if you're the landowner, Kevin, let's say you've got 500, actually, let's say you got 5,000 acres in Southeast Wyoming. This is a real case study. You got 5,000 acres in Southeast Wyoming, um, not the best ground on that doesn't make that much money, 15, 20 bucks an acre. It's tough. Can't farm it. And you got these huge transmission lines running through the farm, through the ranch. Ugly as can be, you're not going to get a premium on selling the ground because of those huge transmission lines. And you start getting letters in the mail of saying, okay, company X, they're interested in putting a solar farm battery storage project on your property. And here comes company Y. Now it's the same thing. They are not really on your side. They ultimately want to be a partner with you and make money leasing your property, but they are reaching out to you to see how low they can actually get that opportunity, get it in their queue, get it in, and get the project taken off. So you want to make sure that you get as many of those offers as you possibly can. You're that landowner, but you're going to be a little bit guarded because you don't know that much about solar to begin with, right? You're going to look at this and say, okay, now I'm starting to realize I have something of value here, but now I'm kind of cautious. I'm kind of willing to just sit back and let's see what happens over the next couple of years.
Mm-hmm.
There's that psychology that once you start knowing that there's something of value that you know nothing about, and I want it, you're going to pull back from the table and say, okay, hold on a minute, let's not rush into this. Versus if you are an investor, now let's say you still own the 5,000 acres and you're wanting to sell it, and you're not interested in trying to make any of this money. You're just done with ranching. You're going to sell the ranch. The the matriarch, the patriarch of the family aren't doing well, so we're just going to sell the thing. I'm going to look at it as an investor and I'm going to say, okay, Kevin, I'll buy the property from you, but I have maybe more information than you. I've gone to LandGate, I've researched the property. That 500 kilovolt, that's just not any transmission line. It's a 500 kilovolt transmission line. It's enormous. And the other one right next to it's 250 kilovolts. These are huge, huge transmission lines. And they're coming from a coal-fired power plant that's 30 miles away and may not even be producing energy in the next 10 years. I've found all of that out really quick, and I'm going to go and I'm going to buy your property from you. You don't know any of this. So I'm going to buy that for past year prices. And the first thing I'm going to do is go ahead and list that out on the property or out on the marketplace for LandGate. And I came at it from a completely different perspective. I'm still getting these letters in the mail, but I don't care about them. I'm going to proactively put my opportunity out in the marketplace, knowing that everybody who's looking at it, they also know that other people are looking at it. It's
Mm-hmm.
fundamentally a completely different negotiation tactic
Yeah.
rather than, and even me, if maybe I even know a couple people. Well, I know a guy at this huge company. I'm going to call them and they'll make me an offer. Well, like, absolutely, they'll make you an offer. It's going to be an offer that you asked for, which is no different than any
Yeah.
offer that any of your investors listening to, if you would call them with your 5,000 acres and say, hey, I'm thinking about selling it, make me an offer. Well, they're not going to give you their top offer to start with unless they know they're competing with somebody,
Mm-hmm.
right? And that's what's interesting about what we've been doing since we've started merging into the real estate market is it's not two different industries anymore. Where typically people would think about you selling your ranch or you even selling 50 acres off of I-25 in the Front Range of Colorado, you're going to think about it with your commercial real estate hat on. And that's what I try to get across in all of the talks that I give in front of real estate groups and investment groups. You are now competing with folks who are looking at the exact same property and they know everything that you know about the exact same property. They know how much cash flow it can make by subdividing it. They know how much the development everybody knows that portion, that part of it. If you know less than what someone else does making the acquisition, you lose. You are losing
Yeah.
that negotiation no matter what product or commodity is you're buying. If you have more information than the person that you are either buying or selling from, that is how you win in any divestiture or investment.
Mm-hmm.
You just need the information.
Yeah. Yeah, no, all valid points. Just again, I appreciate all the additional insights there. Would you say that most developers, again, let's just use solar, most solar developers, the reputable ones that are out there, are more interested in doing leases versus that of just acquiring the property themselves?
That's a great point, and I'm really glad you asked that question because I should have brought that up earlier. Historically, for energy leasing, it was all leasing. Very, very rarely would an energy company go out and buy minerals, things like that. and this is starting like probably 6, 7, 8 years ago when solar and wind was really taking off, it was mostly leasing at that point. What we've seen over the last 2 to 3 years, energy companies are becoming far, far more competitive of just buying the fee property outright,
Mm-hmm.
just buying the property and not even leasing it. And it makes financial sense for them because now they have a hard asset, right? If you look and see what really broke the camel's back with the shale boom once commodity prices dropped, and when I say the shale boom, horizontal drilling across the United States, what really hurt it was hundreds of billions of dollars was invested off of leasing. Well, your lease is invalid unless you have more capital to bring a rig on location and drill that lease and produce. So you not only spend hundreds of millions of dollars leasing the ground, you don't own anything, you don't own a hard asset.
Mm-hmm.
And then you need hundreds of millions of dollars more to develop and hold the lease. So what happened is when capital dried up, all the leases basically expired because there was no way to actually hold them. There was no tangible asset there. Energy companies have, I think, learned a lot because they're all a lot of those folks are the same players in solar, wind, carbon credits, things like that, where it makes more financial sense for them in most cases to buy the property. They'll sit on it regardless and let the investment appreciate. And when they go through with an actual development project and they're making significant amounts of revenue. But that's been a huge shift where, and that's why I'm saying the investors right now listening to this call, you are competing, whether you know it or not, you are competing with energy companies.
Mm-hmm.
And what I mean by that are you know Johan Kevin, he's a
Mm-hmm.
CEO of our company. He just bought some property in the northeastern part of the country, and he was working with a real estate agent. And Johan was asking, okay, what is the land going for here? He actually bought and transacted the land with what we calculated the value was off of our website. So we're pretty close on land values as well. But the real estate agent was shaking their head saying, well, this property right down the road transacted for like 3 times what we thought it was going to. Had no clue why. And pulled it up on LandGate very quickly, saw that it was surrounded, ugliest lot that you could find there, surrounded by 3 substations, huge capacity for the interconnection queue. And he was laughing. Johan was laughing. He's like, I'll buy it for what they bought that for 3 times what the value is. I'll buy it right now because someone's going to make an enormous return on it.
Yeah.
So that's the thing. It's not so much leasing anymore. They're buying properties outright for natural resource development. And unless you know, and again, I want to stress this, not every single parcel is going to be high value for natural resources,
Mm-hmm.
right? But if you don't know, you're guessing. If you just the assumption is, well, this is great, it's a great subdivision opportunity, it's a great development opportunity, whatever it is, most of those scenarios you're currently looking at or properties you're looking at, that is going to be the case. But there's going to be some diamonds that you just blow completely by,
Yeah.
or even more scary, that you sell and someone else makes a 50x on it because you just didn't know.
Yeah, no, no, very valid points. I like the strategy of the first case study that you gave, utilizing some of these other um, large land parcel listing sites. There's a number of them out there, that most not recognizing any of the additional value other than just the land itself. And cross-referencing that with the data that you guys provide on your website, just really getting an understanding of, is there additional value there that other folks, the general public, are not seeing. I think that's probably at least in my opinion, most strategic approach for those that might be listening in here to maybe uncover some diamonds in the rough that, again, that the general public just isn't seeing, or they're not realizing that there's a much greater value to that. Again, using Yoan, the
Mm-hmm.
example up in the Northeast, right? The perfect example right there. So
Yep. Or even property that they own right now. I
yeah, or
guarantee
that,
you
yeah.
that like some of the funds that are listening, some of the investors that are listening that have, X amount of properties in Florida and Georgia and Arkansas, wherever, guarantee you they have not looked at their own portfolios in a way that sufficiently would determine whether there's upside potential there or not. And
What,
I mean,
yeah.
yeah.
I was gonna ask, is there a typical like minimum size? When we start talking about like a solar farm or
Mhm.
battery storage, is it 10 acres? Is it 20? Is it smaller, greater, what have you? I mean, and I obviously maybe sometimes the bigger the better, but like, is there a typical minimum that you see that is, or is there a range that becomes the most attractive based on density and things like that?
You know, 12 months ago, if you asked me that question, I'd say, yeah, for commercial scale, you don't want to be below 40 to 20 acres, right? Which
Okay.
would rule out a lot of commercial type of lots. Where we're sitting today with the Inflation Reduction Act, all of the things that are this $2 trillion getting ready to be pumped into the economy over the next very short 18 months for some of these specific energy production type of programs, it really is all of the above. I mean, you can go with what's called behind the meter solar facilities. A couple acres of solar panels behind the meter means that it's not actually being plugged into the grid. You would have an immediate off taker of that power who's buying the power from the solar panels or the project or the wind turbines, and they don't actually have to even be close to a transmission line or a substation. They're buying the power immediately. So now with the large push for community solar, behind the meter type renewable energy projects, it's really opened the spectrum to any and all above, as long as it's in a good spot. Which people say, well, how do I know that? Well, LandGate tells you if it's in a good spot or if it's high value. But as long as it's in one of those corridors that we've identified as being high value, you get it out there. I mean, few acres for solar, community solar type projects, only probably 4 or 5 acres for battery storage projects. And then, I mean, EV charging, I mean, you see how small
Yeah.
those facilities are, though. I mean, it's really all of the above.
That's a great point. So like one of those solar farms, behind the meter solar farms, like just the example of what that might, it's not going into the grid, would that, for like a master plan community, something along
Yeah,
those lines, would be the end user for that?
exactly. And you're seeing
Okay.
a lot of that, right? Where they'll set aside, let's say there's a section 640 they're going to develop, or let's say 320, half section, they're going to develop it, and they'll carve out 40 acres. They'll put a 40-acre tract out in the northeast part of the tract and say, okay, well, here's going to be our community solar farm. Now, I
Hmm.
won't get into the metrics of, how much energy over how much period of time does it generate, things like that. But the premise of that project is, yes, you don't have that solar farm is not going to be plugged into the overall grid. It's not going to get plugged into ERCOT or Excel or Tri-State, wherever you're at. It's not going to get plugged in. It's going to be consumed directly on site from the
Hmm.
development. So I think, again, if people never really dip their toe into the natural resources renewable energy market, this is part of what you guys do every day.
Yeah.
There's not going to be a single large development subdivision, anything like that, that's going to go through in a lot of these states without some sort of community renewable energy tied to it, right?
Hmm.
So if you know that and you already have that before some of these things are starting, you can really, really play your cards well.
Yeah. No, no, all great advice. And I know we're running up against the clock here,
Sure.
Greg, and really appreciate your time. This has been a great conversation, very insightful, and I think just lots of gold nuggets and just lots of value taken away from it. So for those that are tuning in here, they want to learn more about you and the resources that your company offers. Is landgate.com, is that the best place for them to go?
That's it. Yeah. I mean, most of the folks here are probably going to be involved with our real estate, our power real estate tool.
Hmm.
Yeah, just go to the website, and if you have any questions, reach out to us. We'd happy to help you guys with your investments.
Okay, fantastic. Well, Craig, thanks for joining us today. It's been a lot of fun having you, my friend.
Kevin, I really appreciate the time. Thanks, man.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin, but wishing you huge success. Take care now.